Alrighty. So in today's video, I'm going to be sharing with you a very simple daily routine that you can use to identify credit spread setups in the market, right? So this daily routine is not going to take you a lot of time. In fact, if you have 15 to 20 minutes each day, it should be more than enough, right? Once you set everything up, then it should be pretty simple and easy to identify these setups. So I'm going to show you how to set things up, right? So if you're new to trading credit spreads, definitely you can use this daily routine as well. So this is a TradingView chart that I'm showing you right now. If you don't have an account with TradingView, very simple and easy to set it up. So get that set up first. Now next, you want to find the stocks that you want to trade, right? So generally you want to have a watch list of stocks. How many stocks you want, that really is up to you. But if you want to have enough candidates for you to trade the credit spreads, then definitely you want quite a number of stocks, right? I would say maybe around 10, 20 or even more, right? This way you have a number of stocks to choose from. Now, as for the stocks, I generally like to find the fundamentally good stocks for trading the bull put spread, right? So as you know, bull put spread is a bullish strategy where we want the market to go up. So I'll be trading them mostly only on the fundamentally good stocks. Because if the stock is fundamentally strong, that means, at least it has been profitable for the past 5 years, then the chances of it going to zero is not as high compared to companies and stocks that are not profitable at all. So for the bull put spread, I really like to trade on fundamentally good stocks. But as for the bear call spread, then this can be any stock, right? It can be fundamentally good stocks or stocks that have not been profitable as well, right? For example, AMC or maybe GameStop, some of those popular meme stocks. So basically, you want to have a watch list of sufficient stocks for you to cycle through to identify setups. Now, once you've got the watch list done, the next thing is how are you going to set up the chart? So as you can see over here, I have a pretty clean chart, and all I have over here is this stochastic oscillator, right? So for this stochastic oscillator, what I use is this stochastic oscillator over here, right? Let me just open up the settings for you to see. So once you go inside the trading view, you go to indicators, you just type stochastic, right? And once you type out the stochastic, click on that, it should populate onto your chart. And this is the setting that I use, right? I just use 1033, and you can follow along if you want to as well. And as you can see, it's pretty simple, very clean as well. And I removed the other line. So you notice that I only have one line over here. So let me show you which is the line that I actually removed it. So if you go to style, you notice that for the percentage K, I have it unchecked, right? I only need this percentage D. So just remember, Davis, right? My name, Davis, just have that on at all times, yeah? So the others, yeah, just leave it as default. We don't need the middle band as well. And for the colors, yeah, you can just change the colors to whatever you want and leave it to 80 and 20, yeah? So once all this is done, just click OK and you have the stochastic. Now, the other thing is that some people have asked me, Davis, do you use this on intraday? Do you use this on daily, weekly, monthly? I just use it on daily, and it's more than enough, right? Because the way we're going to trade the options is not where we're going to be day trading it, right? We're not going to be scalping options, right? This is more slightly longer time period. And as you guys know, if you have been seeing a number of my videos already, I like to go around 45 days because that's where our edge lies. Now, as for the price options, I just go with candlestick, right? As you can see, there are quite a number of options down here. I just stick with candlestick, more than enough. Now, with that said, we are not going to identify any candlestick patterns, none of this shooting star, morning star, three crows, so on and so forth, right? I'm just looking at the candlestick based on the price, right? Where the market is currently. So once you've already got this set up, now this is then where we try and identify potential trades. So the very first thing that I will look out for, right, as you guys know, if you have seen some of my credit spread videos already, is that we're just looking for overbought and oversold areas first. So this is the very first criteria. Is it overbought or oversold? So if it's overbought, then this is going to be a potential bear call spread setup. And if it's oversold, then it's going to be a potential bull put spread setup. Now that we have identified this, it's time to just simply cycle through the stock. So as you can see, Amazon right now is somewhere in the middle. It's neither overbought, oversold. I'm just going to skip over it. Then I'm going to the next one. Next one, Microsoft. Now, Microsoft is close to being overbought. So this is something I might take a look at, right? Maybe over the next few days, if the market continues to go up, then this is where we can have a potential entry. And as you know, for bear call spread, we want to look out for resistance, right? So resistance basically is a place where the market has shown to have turned before, right? Over here. So this is where I'll be trying to identify possible setups. So as you can see right now, it's still not above this red line. So I'm going to skip Microsoft for now. So next, go on to the next one as well. Let me just remove this drawing. So as you can see, Google indicator is showing that it's somewhere in the middle. So I'm going to skip that, move on as well. Now for NVIDIA, as you can see over here, it is now overbought, right? Somewhere around the overbought region over here. So we have a potential setup, right? Potential doesn't mean we are definitely going to get into it. So the next thing we need to see as well is the resistance. So as you can see over here, the previous resistance is somewhere here, and it has already broken above this resistance. So I want to see whether there's any other resistance above there. So I'm just going to, zoom the chart out just to see whether I can see any others, and apparently there isn't. So let's go to the weekly. So we are now at the all-time high. So generally at the all-time high, I don't really like to place it just yet. I would prefer if there was another resistance above. So this way, at least I know there could be a bounce off, because there could be times, right? This could be considered a breakout, right? It could be a breakout whereby the market could break above this and then find some bounce here and then go up here again. So for this, I'm going to skip over this trade setup. By the way, if you like this video so far, please subscribe and also click the thumbs up button, and also do get your free copy of the Options Income Blueprint, where I share the top 3 option strategies that help you generate a consistent income each month, trading just 1 to 2 hours a day, right? So if you want to go ahead to get this copy, just head on over to optionswithdavis.com/blueprint. All right, back to the video. Okay, next, let me take a look at Meta. So Meta right now is actually oversold. So we have a potential bull put spread setup. So let us take a look, where is the support. So as you can see, there are a few support areas. There's one down here, there's another one down here, and this was previous resistance, now it's coming down onto support. So this could be actually a potential setup. So what I'm really looking to do is that if this market does come down a little bit, I want to place my bull put spread below this support and resistance line down here, right? So it was previously a resistance, now it can act as a support. So ideally, I want to find the strike somewhere below here, right? So this will be where my short put is, and then the long put really depends on where your risk is, right? So it depends on your risk per trade. So let's head on over to the option chain to take a look and see whether we can find something that is something that we want. So this price down here, you want to take a look at, right? You want to take notice of, which is around 530, which is where our potential support area going to be. I want to find the short put that is below 530, right? Basically the short put strike for the bull put spread. So let's head on over to the option chain. Okay, so as you can see over here, I'm now in the option chain. So let me just open it up a little bit. So as you can see, 530 is here, it's around 25 delta. And I want the short put to be somewhere below. So I'm taking a look at the delta right now, and I can see it's about 23 delta, which is actually pretty decent, because ideally I want my short put delta to be around 20 to 30 deltas. If you're a little bit more bullish, you can go for the higher deltas, you get more premium as well. So ideally, maybe somewhere around 30, around there would be pretty good as well. So I know that 525 will be a very potential short put strike that I want to choose. So I could go with this strike, but right now it's at 23 deltas. So I would like to see the market drop a little bit more first. So maybe once it has dropped a little bit more and this becomes 30 delta, then you can consider putting it on. So how do you construct the long put? Really depends on your risk per trade. If your risk per trade is around $500, then you want to go for the 5-point wide. If it's around $1,000, then you go for 10 points wide. Now, if your risk is much smaller than that, let's say around $100 or $200, then most likely you cannot put on this trade, right? Because the minimum in terms of the strike interval is $5, right? So if it's $5, your risk is going to be under 500, around $500. So how do you know? All you got to do is just go to the chart to see. In fact, you don't have to go to the chart, just go to the review, and you can see your risk down here is $364. So if you have anything lower than that as your risk per trade, then you can put on this trade, yeah? So at this point, we're not going to enter into the trade just yet because I would prefer for the market to go a little bit lower, wait for the delta to be a little bit higher, and then I get a little bit more premium on the trade. But if you feel comfortable with this, you wanted to give it a go, you can by all means enter into this trade as well. Now, once you've done that, the next thing you do is just go back to the charts, right? Go back to the charts and look out for the next candidate. Now, let's take a look at the next candidate. It's going to be Palantir, right? Palantir, it's all the way going up. So most likely, you know, there's no potential setup. Next one, this one also, you can see is nowhere near the overbought or oversold, somewhere in the middle. Skip to the next one. Now, Adobe, okay, so Adobe is oversold right now. So Adobe is oversold, market has been coming down. So same thing, we want to identify the support areas because we are going to put on the bull put spread. So as you can see, I've identified the setup somewhere around here. So I think it's somewhere around 435 thereabouts. Now, if you want it to be much more accurate, of course, do not use these drawings, right? These drawings is just to illustrate for you. You want to make it more accurate, use the horizontal line and then put it somewhere around here, right? So as you can see, let me just quickly remove the drawing so you are able to see. So it's around 435, right? So we want to have the short put strike below there. So most likely right now, the market, or rather Adobe, is a little bit too far away from where you want to place the short strike. So chances are that this short strike price of below 435, maybe 430, the delta is going to be a little bit too low. So let us take a look, right? Let's head on over the platform again. Okay, so as you can see, 430 right now is around 19 delta. So this is a little bit too low for our liking. So we want to wait for the market to go a little bit lower before we start to place the trade. So once there's no trade, same thing, we go out back to the charts again, and then we go to the next few underlyings, right? We go to the next stock. So over here is Tesla. Tesla is almost overbought, but just not yet, so we skip. So as you can see, it's pretty quick for you to cycle through. As long as it's not overbought or oversold, just go to the next one. Not overbought, oversold. Now this is getting closer to where the oversold is, so definitely you will want to pay attention to this over the next few days. But at this point, just skip over. PayPal, same thing as well. Just skip over, go to C, close to oversold, not yet. BA, not yet. BAC, not yet. Disney, not yet. All right, so as you can see, we've just cycled through the watch list. Now, of course, if you have many more stocks, just add them and then just cycle through it. So this is a very simple routine that you can use to identify possible setups in credit spread. So if you are brand new to options trading, use this as a way to very quickly identify setups to trade credit spreads. By the way, if you like this video, then you're absolutely going to love this next video which I have for you. So go ahead and watch that video right now. Also, if you haven't already gotten your free copy of the Options Income Blueprint, you can do so just by clicking this link down here on your screen and you'll be able to get it for free. Alright, I will see you in the next video.